Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about LUMAX Automotive or Auto Technology. Has the bottom been formed in the stock, or should you wait for more declines to get into the stock, or should you buy at all? So let's get started. First of all, a disclaimer that this is not a stock recommendation, and people taking any position into any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about LUMAX Auto, here's a small request that kindly support me on Patreon. Once you do that, I'll make better videos on YouTube and also help you in market companies' queries with one-line answers. It starts from $2 a month, and if you take a $10 Patreon membership, you will get access to my portfolio as well as a watch list, a portfolio that I keep on, you can say, moderating uh, weekly or in 10-12 days time, and same goes with the watch list. For detailed market or company analysis or a number of stocks that you're having, kindly email me directly and we'll work something out for that. Also, you get access to a number of articles and short-term calls, long-term calls that I put up on Patreon from time to time. Now about Lumax Autotech. It was established in 1981, and it is into auto components manufacturing and boasts of marquee clients in the four-wheelers and the two-wheeler division. It's spread across 13 locations across India and serves all the marketplaces here in India. Major auto players are their clients. Have global presence with clients across Europe, and Europe is the biggest market abroad. And currently, with the kind of situation that we were into, it had found very difficult for its market or its business to do well. But over a period of time, now that Europe is opening up, that augurs well for Lumax Auto. The clients include Maruti, Honda, Bajaj Auto, etc. If you look at the numbers, then the market cap of the company is around 500 crores. The sales is around 290 crores versus sale came out to be 290 crores versus 320 crores. The profit has dropped by 27%. These are December numbers. Debt has increased significantly over a period of time, and this is primarily because the business has taken a hit because of what has happened to the auto industry globally over the last couple of years. So they are not able to furnish the debt that well, and so debt has kept on increasing. Margins have shrunk. It trades at 8 times earnings, so it is trading at a very much discount, you can say, compared to many of the industry. But in terms of the auto ancillary industry, this is the norm right now, that companies are trading between 5 to 10 times earnings because of the current slowdown in the auto sector. High combined promoter and institutional holding, only 15% free float or 15% of the stocks are with retail investors, and that is a positive. If you look at the performance of the stock, then stock has fallen sharply since August 2019. So till about April, June, July, August, June or July 2019, things were looking fine with the stock being at around 200 220 levels. It fell from 210 levels and fell 75% from those levels. Most of that fall came in between February and end of March, when the whole market capitulated, and this stock fell to all the way down to around 48 47 rupees from 210. On a 5-year basis, it has virtually done nothing, so it is trading at around 70 odd rupees, and it was trading at 70 75 rupees in 2015 as well. Results have been subdued and margins have shrunk. We have seen even profitability go down gradually over the last 10 12 quarters, and this is the reason why the stock is not able to perform. Return ratios is also not that great. It is, you can say, nominal in nature. So why there has been a slowdown? First of all, the auto industry as a whole has been under stress. So uh, apart from the current situation of the pandemic and whatever is happening with the shutdown, that has also means accelerated the kind of fall we have seen in the stock. But before that, even before that, since the start of 2018 calendar year, we have seen auto industry under stress with very low demand here in India and a similar low demand in Europe and US because of the economic slump. So what has happened is that the commercial vehicle segment has been hit drastically with the very low, you can say, infrastructure push from the government spending has really gone down over the last couple of years, and that has led to virtually no usage of the commercial vehicles. If there are no sales, then there are no demand to make more commercial vehicles and more spare parts for the same. So that is one aspect or one segment which has got hit. Even for passenger vehicles, the demand had really gone down till, you can say, FY20. So 2019-20, or this year, the first half of FY20 was very bad for the auto industry, and hence the auto, see, the auto ancillary stocks would suffer more because they don't have any big margins to play with, and they would have to reduce margins in order to sell their products, because the pricing power is with the auto companies, or the larger auto companies. So this economic slowdown has really hurt the infrastructure space, that really hurt the people with respect to their salaries. There have been very little promotions or increments in terms of salaries even before this pandemic. And now with the pandemic, you can very well see that the plants had to shut down, and many of the businesses, especially in this manufacturing sector and the auto sector, had to shut down completely. Maruti came out in April and told that in April they were not able to sell a single car or something like that. Very, very low sales, or virtually no sales in many parts of India. That has that direct impact on many of the auto ancillary space, and Lumax Auto is not an outlier. So it got hit very badly, and that's why the stock fell all the way down to 48 rupees. There is a projection of further stress in the next year and a half at least. So I can see that FY21 or till the second half of FY22, so that comes out to be somewhere in September October 21. Till that time, I don't see the auto, at least the auto ancillary space, do really well. But if one needs to really get into it, then you need to buy the leaders either in the autos or ancillary space, rather than going with the third or fourth rung players. And in that respect, I would say that at least wait for 2-3 quarters and let's see how it goes. You can even see lower, you can say, stock prices in many of the auto ancillary space. This is a sector which has been out of favor for the last couple of years and will remain out of favor for at least a year and a half. If you look at the technicals of the company, then major long-term support lies at around 50 level. It is right now at 72, so probably a 20-25% stop loss you can keep if you really want to buy it for the long haul. There's a big resistance zone between 82 to 85 levels, around those levels. Up move is expected above 90, 85 to 90 in that zone, because the 200 DMA is around 88. So once it closes above it, we could see a big up move in the stock, maybe till 120, 130. It looks extremely weak on charts, and you could see lower levels coming in this stock unless it crosses 90 levels. So it could be a false breakout that is taking place at the moment, and you could see levels of 78, 80, but then we could see a sharp downtick towards 60 levels as well. It looks extremely weak on the technical charts. So my call in the stock is hold if you have it. So if you have it at 120, 140, and if you have a 4-5 year time horizon, 6 year time horizon, you can hold, you can get your prices back. There's no question about it. But if you think that there will be an opportunity cost loss over that period of time, then probably you need to exit the stock and get into better sectors which are more directly consumer driven. And I have talked about many stocks in that space, whether it's in the white goods space, in pure auto, like the larger auto players, whether four wheelers or two wheelers, some of the agrochemical space. There are a few pharma stocks I have talked about time and again. So there are other sectors and other stocks that one can look at. Cycle will turn around in the next year and a half, and have only 5% holding in stock. So this one video on Lumax Auto. Please like and subscribe my channel and hit the bell icon. Thank you.